Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories in company filings, and today we've got a report that has got a little bit of everything from stock issuances to loan payoffs. Buckle up, let's dive straight into what Curanex Pharmaceuticals Inc. has been up to. This filing is all about some recent corporate actions and financial housekeeping. First off, this is a report that companies file when something significant happens that shareholders need to know about right away. Think of it as a press release mandated by the SEC. Our company today is Curanex Pharmaceuticals Incorporated. They are a Nevada incorporated company. Their main publicly traded security is their common stock, which trades on the Nasdaq Capital Market under the ticker symbol CURX. Now, let's talk about some stock. On the 25th of September 2025, Curanex issued 28,312 shares of their common stock to an investor named Xiao Hong Song. This wasn't a public sale, it was part of a private agreement, a subscription agreement that was finalized back in November of 2024. The shares were issued after their initial public offering, or IPO, had successfully closed. Mr. Song invested $200,000, and these shares represent a small piece, 0.1%, of the total outstanding shares at that time. The company states they issued these shares under an exemption from registration rules, meaning they did not have to register them with the SEC because it was a private transaction, not involving a public offering. Moving on to another key event, Curanex prepaid some significant loans. They had received loans totaling $400,000 from Dine Yingjing, who is the secretary and also the wife of the chief executive officer. These loans were taken out on the 4th of February 2025 for $200,000 and on May 21, 2025 for another $200,000. To back these loans, the company issued two promissory notes. The first note, issued in February and later amended in May, had a principal of $200,000 with an interest rate of 4.34% and a maturity date in February 2027. The second note, issued in May, was for the same principal amount, also at 4.34% interest, with a maturity date in May 2027. Importantly, these notes allowed the company to prepay the amounts without any penalties. So, what happened on the 23rd of September 2025? Curanex prepaid the first note entirely, including all the interest that had accumulated up to that date. Then, on the 24th of September 2025, they did the same for the second note. The total amount repaid for both notes came out to $408,537.32. This included the $400,000 in principal and $8,537.32 in accrued interest. Specifically, $5,540.93 was for the first note and $2,996.38 for the second. The kicker here is that by paying off these promissory notes, Curanex has completely eliminated their outstanding debt related to these loans. They also avoided paying an additional $26,182.68 in interest that would have been due between the repayment dates and the original maturity dates. This looks like a strategic move to clean up their balance sheet and reduce future interest expenses, especially since they have recently gone public. Finally, as is standard for these filings, they include an exhibit, in this case the cover page information in an interactive data format for easier machine reading. Now, let's look at the bigger picture here. Curanex has had a busy period. They completed their IPO earlier in the year, a major milestone that brings in capital but also increases scrutiny. Issuing shares as part of private subscription agreements after an IPO is not uncommon, but investors will always watch how these private placements are structured and priced relative to the public market. The repayment of the loans from the executive's wife is a good sign. It shows the company is using its newly raised capital or incoming cash flow to shore up its financial position by eliminating debt. This is a very positive move, as it reduces financial risk and frees up future cash for operations or growth. The amount of interest saved, while not massive in the grand scheme of a pharmaceutical company, demonstrates efficient financial management. It signals a commitment to strengthening the company's financial health post. IPO, however, we need to keep our eyes on how Curanex uses the capital from its IPO. The success of a pharmaceutical company relies heavily on its research and development pipeline and its ability to bring new drugs to market. While this filing doesn't detail their R&D progress, the underlying health of their financials, as evidenced by the debt repayment, is a crucial supporting factor. The fact that they are an emerging growth company also means they have some flexibility with accounting standards, but it also means they are still in a growth phase where cash burn can be high. In conclusion, Curanex Pharmaceuticals Incorporated is taking proactive steps to manage its finances and streamline its balance sheet following its IPO. The early repayment of significant debt is a positive indicator of financial discipline. Investors will be looking for continued progress in their business operations and R&D efforts to justify their valuation. What is your take on Curanex's recent financial moves? Do you think paying off these loans was a smart move for the company? Let me know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more dives into corporate filings. Also, don't forget to join our Discord community, linked in the description below for more in-depth discussions. Thanks for watching, and I'll see you in the next one.